Dinar shift: what an extraordinary moment we are witnessing in the global currency landscape. The financial world is experiencing a surge of activity, with reports suggesting that internal banking systems are now displaying critical new data. What began as persistent speculation is reportedly solidifying into something that resembles a genuine financial movement, signaling a potentially monumental shift for the Iraqi dinar. Insiders across various networks are speaking of an internally fixed value for the dinar, a rate that could dramatically reposition Iraq's currency on the global stage. This reported fixed internal rate is being discussed in terms of a staggering 4.04 per Iraqi dinar, a figure that, if officially confirmed, would reshape the economic perception of the nation overnight. Furthermore, this dynamic is not limited to one currency. Parallel discussions are heating up around the Vietnamese dong of VND, suggesting it too may be poised for a significant value alignment. This convergence of reports hints at the possible activation of one of the most significant currency revaluations or RV events in modern history. The sheer scale of this reported change is what commands our attention, pushing us to delve deeper into the mechanics of what is unfolding behind the scenes, how major financial institutions are reportedly preparing, and what this potentially means for the global economy in the days ahead. We will track every detail of this developing situation. The most compelling narrative circulating through financial circles right now revolves around the internal systems of numerous major international banks. There are widespread, consistent reports that these platforms, particularly those linked to cross-border financial networks, have initiated locked placeholders for the Iraqi dinar. This technical term, often used within the banking sector, suggests that specific internal screens are now displaying the reported 4.04 valuation. It is crucial to note that this figure is not yet reflected on public, globally accessible Forex exchange platforms, but its rumored presence within the confidential internal infrastructure of major financial players is the first step in a highly structured currency adjustment process. The internal rate display is a procedural precursor to a public release, designed to prepare institutional systems for the immediate transition when the new value goes live worldwide. This level of synchronization and consistency in reporting, spanning from domestic sources to international financial centers, is a development that many long-time observers are finding difficult to overlook, suggesting that this move could be far more substantial than previous rumors. The sheer magnitude of a reported 4.04 exchange rate cannot be overstated. It fundamentally redefines the Iraqi dinar's standing. Should this valuation be officially adopted, the dinar would immediately join the ranks of the world's most highly valued currencies. To put this figure into perspective, comparable Gulf currencies like the Kuwaiti dinar currently trade in the range of approximately 3.25, while the Bahraini dinar sits around 2.65. A 4.04 Iraqi dinar would thus surpass these established regional powerhouses, signaling a profound and undeniable statement about Iraq's economic resurgence and its resource-backed stability. This is not merely a number change, it is a declaration of economic sovereignty and self-reliance, confirming that the nation's years of focused effort on building up its gold reserves, stabilizing its oil production, and accumulating foreign assets are coming to fruition. Such an elevated rate is the financial manifestation of Iraq's return to a position of prestige and power on the international economic stage. For those individuals who have physically retained holdings of the Iraqi dinar through the long period of uncertainty and undervaluation, the implications of this reported rate are truly transformative. Based on the rumored 4.04 exchange rate, a single 25,000 dinar banknote would equate to a value exceeding 100,000 USD upon exchange. This calculation underscores the intense focus and emotional investment that has surrounded this currency for years. The widespread excitement now being observed online and within specific communities is a direct result of the belief that the long-awaited payoff may finally be at hand. However, the prospect of this transition also brings forth a necessary level of institutional caution. The process of exchange, should the rate be confirmed, is expected to be meticulously phased. Initial exchanges would likely involve high-level institutions, followed by entities holding large-scale government contracts, before eventually opening up a brief yet critical exchange window for retail investors and everyday holders. Inside the operational centers of major financial institutions, the activity is reported to be intensifying. Sources indicate that several globally recognized U.S.-based banks have been undertaking discrete updates to their internal currency management systems over recent days. The alleged sightings by bank personnel include locked, inactive rate codes and the aforementioned placeholders for both the Iraqi dinar and notably the Vietnamese dong. The appearance of these inactive internal indicators is a pattern that has been observed preceding nearly every significant currency revaluation event throughout contemporary financial history. Institutions typically execute these system-wide updates well in advance of any public announcement to ensure stability and prevent catastrophic system failures when the new values are finally activated. The replication of this specific preparatory procedure across numerous, unrelated banking networks is a primary reason why many financial observers are treating the current reports with such a high degree of seriousness, recognizing the telltale signs of an imminent structural change. Adding further weight to the reports is the recent public messaging emanating from the Central Bank of Iraq's CBA. Their statements have consistently and deliberately focused on themes of achieving financial stability, establishing global parity for the dinar, and implementing a comprehensive new valuation framework. In the guarded, precise language of central banking, these phrases are understood by analysts to signal a structured currency adjustment process. When the CBI speaks of achieving parity with key trade partners, it is essentially communicating that its currency is being recalibrated to reflect its true underlying economic value. The confluence of these clear policy signals from Iraq's monetary authority and the anecdotal reports of internal bank rate locks at 4.04 creates a compelling and increasingly logical narrative. The Iraqi government has been vocal about its determination to reintroduce a strong dinar to the world market, and the reported internal banking maneuvers suggest that the groundwork for this reintroduction may be nearing completion. Furthermore, there is mounting speculation concerning the engagement of global financial bodies such as the International Monetary Fund's IMF. Rumors suggest that these high-level institutions are preparing for official statements regarding a financial update. Recent closed-door meetings among international financial leaders are alleged to have included discussions on currency normalization and regional alignment. These terms are specifically associated with the final preparatory stages before a new currency rate is officially unveiled to the international market. While these critical discussions are, by design, kept private, consistent insider briefings have pointed towards a potential scenario where the new Iraqi Dinar rate could become publicly visible on all major Forex trading platforms within a matter of days. This highly compressed timeframe perfectly correlates with the intense, synchronized banking activities that are being reported worldwide, marking a period of heightened anticipation. The economic fundamentals of Iraq provide a rational basis for such a massive revaluation. The nation possesses a vast and globally significant resource base, specifically over 145 billion barrels of proven oil reserves, which forms the bedrock of global commodity trade. Valued conservatively at around 80 per barrel, this represents an enormous reserve of over 11 trillion in potential economic strength. In addition to this resource wealth, Iraq has systematically fortified its gold reserves and has managed to build its foreign reserve balance to a figure reportedly exceeding 120 billion. This formidable combination of liquid reserves and tangible assets provides the necessary robust economic support structure to underpin an exchange rate of 4.04. The geopolitical context has also shifted. Iraq is now prioritizing political stability, expanding its global trade relationships, and implementing a modernization of its economic structure based on transparency, transforming it from a fragile economy into a rising regional economic powerhouse. The impact of a 4.04 dinar would extend far beyond Iraq's borders, creating ripple effects across the entire global financial structure. For decades, Iraq was institutionally bound to conduct the sale of its vast oil resources predominantly in US dollars. A strong, revalued dinar, however, opens the door for the country to demand and facilitate oil sales directly in its own currency. This single shift is of immense consequence, as it dramatically strengthens Iraq's economic sovereignty, reduces its systemic reliance on the US dollar, and empowers it to forge new foreign trade partnerships denominated in its own currency. This move sets a powerful, structural precedent that other resource-rich nations, particularly in the Middle East and Asia, will observe closely. This is where the story of the Vietnamese dong VND gains significant relevance, as it is seen as a potential beneficiary of this changing global dynamic. The Vietnamese dong is currently under intense scrutiny from global currency watchers, with parallel reports suggesting that Vietnam's central bank has also been meticulously reviewing and preparing its internal exchange rate systems for a potential upward correction. Vietnam has experienced an extraordinary economic boom over the past decade, driven by exponential manufacturing growth, significant inflows of foreign direct investment, and record-setting exports. Despite this genuine and measurable economic strength, its currency has remained largely undervalued relative to its real world economic output. If the Iraqi dinar successfully launches at the 4.04 rate, it is widely believed that the Vietnamese dong would not remain an exception for long. Many analysts are projecting that Vietnam is preparing a structured revaluation or a formal currency alignment that could follow Iraq's lead within a relatively short time frame, potentially a matter of weeks or months, as nations adjust to the shifting global financial tectonic plates. Financial experts are now describing this potential scenario as a domino effect, a sequential global value realignment. The successful revaluation of one major developing, resource-rich nation could logically trigger similar actions from other countries that find themselves in comparable situations of having undervalued currencies despite burgeoning economies. This could potentially spark a cascading wave of new global currency value corrections spanning Asia, the Middle East, and even parts of Africa, representing a monumental and coordinated economic reset. In anticipation of this macro shift, major investors and analysts are already subtly repositioning vast capital reserves. There is a palpable trend of capital movement away from traditional, established safe havens and into emerging markets, where the most dramatic value corrections are anticipated. This kind of financial portfolio shift is a phenomenon not seen in decades, promising both massive new opportunities and a period of unavoidable, short-term volatility in key global markets. For individuals who currently hold physical notes of the Iraqi dinar or the Vietnamese dong, the key message from financial experts remains clear: maintain composure and proceed with meticulous planning. Should a revaluation be confirmed, the implementation will be controlled, phased, and managed collaboratively by the Central Bank of Iraq and its international financial partners to ensure systemic stability. The paramount directive is to secure and document all physical currency holdings, keep notes safe dry, and ensure that all legitimate purchase receipts are retained. When the verified official rate is made public, established official banking institutions will require documented proof of ownership before processing any exchange transactions. It is vital to remain highly skeptical of unverified rumors, private exchange deals, or any early exchange offers, as the official and legitimate rates will be publicly confirmed and processed exclusively through authorized financial channels. Beyond the immediate act of exchange, long-term financial foresight is essential for those who stand to benefit from this potential revaluation. The prospect of sudden, significant wealth necessitates disciplined planning regarding critical areas such as tax implications, future investments, and long-term savings strategies. These are not merely administrative tasks, they are fundamental steps required to protect and sustainably grow any new wealth. A common pitfall in these scenarios is the tendency to make impulsive or emotionally driven decisions. Financial professionals strongly advise patience and mandatory consultation with qualified tax and wealth management experts before making any large-scale financial commitments. This moment demands strategic, disciplined choices, not reactive ones, with the understanding that the official public exchange window, once opened, may be time-sensitive and will not remain open indefinitely. Therefore, preparation is the single most important factor. Certain reports also point to the standard institutional protocol, noting that the new internal rate is likely to be visible first within government and high-level institutional financial systems. This is an entirely standard procedure for massive financial transitions, which must be rigorously tested in secure, private databases to verify stability and integrity before public rollout. Once this internal confirmation is complete, the validated rates are subsequently uploaded to international financial networks such as the SWFT system, before finally becoming visible to public-facing banks, global Forex trading platforms, and the general public. Historically, the duration of this critical transition period, from internal confirmation to public visibility, can range anywhere from a rapid 48 hours to a maximum of 5 full days. If the reports of insiders seeing the 4.04 rate are accurate, it implies the public revelation could be mere days away, marking an electrifying countdown to the official announcement. The current atmosphere on social media platforms is one of explosive conversation, with forums, online community channels, and encrypted messaging groups flooded with alleged screenshots, insider claims, and highly emotional reactions. While the hype and collective excitement are understandable, a disciplined focus must be maintained. Genuine, verifiable confirmation will only come when the major, official banking and financial systems publicly reflect the change. However, what sets this period apart from prior cycles of speculation is the sheer consistency and synchronization of the reports. Earlier rumors were often isolated and scattered. This time, the updates appear to be aligned across major financial regions, with similar reports originating from Europe, the United States, and the Middle East, lending an unprecedented sense of veracity to the current situation. It is vital not to lose sight of the profound human dimension underlying this massive financial story. Millions of individuals globally have held onto the Iraqi Dinar and Vietnamese dong for years, navigating periods of intense doubt, public criticism, and delays, all predicated on the hope for this exact moment. If the 4.04 rate is officially confirmed, it will transcend being a mere financial transaction. It will stand as a powerful story of human perseverance, foresight, and unyielding belief. Those who were disciplined and patient enough to hold their position through the prolonged uncertainty may soon find their faith richly rewarded. The event would represent an emotional victory for a dedicated community as much as it is an economic transformation for the nations involved, adding a deeply personal layer to this global financial event. Looking ahead, the initial market reaction once this news goes public is expected to be characterized by short-term volatility in commodities, particularly oil prices as well as gold and regional currencies. Anytime a major, unexpected currency valuation is introduced to the market, global traders must immediately recalibrate their financial models and risk assessments. However, the long-term consensus suggests that this move will ultimately enhance global trade stability. Iraq will transition into a more balanced and equitable player in the global economy, moving beyond its historical role as a simple resource provider. Its currency will genuinely represent its true economic strength, backed by measurable, tangible assets. For global investors, this shift signals the emergence of significant new opportunities and the foundation for stronger, more reliable partnerships across the Middle East. The trajectory of the Vietnamese dong is expected to mirror this unfolding drama. The Vietnamese government has long expressed its ambition for a stronger, internationally recognized currency that accurately reflects its national economic achievements. Should they elect to follow Iraq's precedent, even a modest revaluation could instantly shift billions in trade dynamics across the entire Asian continent. Regional markets in places like Singapore, Malaysia, and South Korea are already preparing for the potential ripple effects that such a dual currency revaluation would unleash. Some economic analysts are even going so far as to suggest that this coordinated financial action, if it occurs, could initiate one of the most substantial and far-reaching economic realignments of the current decade, setting the stage for a new global economic order. The final stage of this process involves official confirmation. Once international currency platforms begin to actively display the new Iraqi dinar rate, global news agencies and financial analysts will confirm the change, immediately transitioning the revaluation from a topic of speculation to an undeniable economic fact. This will trigger a massive surge in media coverage, including special reports, interviews, and detailed analysis. Authorized exchange centers will open their doors, official memos will be released by banking institutions worldwide, and the community of everyday holders will finally have their long-awaited opportunity to act. From that moment forward, the history of the global financial system will have measurably changed, not just for Iraq and Vietnam, but for the entire infrastructure of global wealth and opportunity. Ultimately, this is a story about profound national transformation, far exceeding the simple exchange of currency. Iraq has diligently worked to rebuild its economic standing, its foreign reserves, and its global confidence. The reported 4.04 rate symbolizes far more than a numerical value. It is the emblem of a nation systematically reclaiming its rightful and sovereign position on the world economic stage. For the millions of ordinary people worldwide who have been tracking this story with unwavering attention, it serves as a powerful reminder that patience, conviction, and meticulous preparation truly have the potential to change lives and redefine personal financial destinies. The same foundational principles apply to Vietnam and every other emerging nation preparing to realign its currency in this rapidly evolving global era of economic self-determination. As the internal bank screens reportedly continue to activate and the persistent wisps mature into visible, tangible updates, the paramount advice for everyone remains: stay disciplined, remain alert, and ensure that choices are driven by facts, not by fear or irrational exuberance. Rely solely on official updates released by trusted, recognized banking channels and keep yourself comprehensively informed. If the consistent data and high-level reports currently being circulated prove to be accurate, the world is on the cusp of witnessing one of the most significant financial turnarounds of the 21st century. And when that monumental moment arrives, those who maintained their calm, conducted their due diligence, and prepared strategically will be the ones who navigate the transition most effectively. Thank you for joining Dinar Shift. This critical narrative is evolving at a breakneck pace, and we commit to tracking every single detail in real time. Please ensure you are subscribed and have enabled notifications, and share this vital information with your community so that everyone remains fully informed. The next few days have the potential to etch themselves permanently into financial history. The Iraqi dinar, the Vietnamese dong, and potentially other emerging currencies are approaching a moment that could fundamentally reshape the distribution of global wealth and opportunity. Stay smart, remain patient, and be absolutely ready, because the lights on those bank screens might truly be illuminating the future.